How's it going, guys? Before I start, just wanted to do a quick mic check. Are you guys able to hear me? All right, perfect. So, just like anything, unfortunately, we have to start with the disclaimer. So, as you guys know, United Traders is not liable for any investment decisions that you make. You are ultimately responsible for any trades that you take, and this is solely for educational purposes only. Now, that being said, first we're going to cover introduction, trading pattern benefits, the conditions, the patterns that I use, risk management that you're going to have in order for you to excel with this strategy, and of course a Q&A session in the end. Now, my name's TJ. As you guys know, our community's goal is to work towards achieving financial freedom. And also, we want to help people just like yourself. Our team is one of the most dedicated teams you'll ever find. And to be honest, I can tell you about United Traders, but it's something that you really do have to experience yourself. So the best thing that I recommend is click on the Discord link. It should be in our description and find out for yourself. Now, I specialize in US equities and I use a combination of fundamental and technical analysis to provide event based, data driven trade ideas. I've been involved in the capital markets for just around 13 years and counting now. And Jesse Livermore. Now, this is an idol of mine, and most of you probably know him. And one of the best quotes that I read is this one right here. And he's spot on with this one because this is a game of speculation. Even though we don't have a crystal ball, we still have to make calculated decisions. And that's what we're going to be covering today. Now, the benefits of this trading pattern. There are a few key benefits, so I'm just going to quickly outline them here. One, consistency. So I found that with this strategy, I was able to actually make money on a consistent basis and on a daily basis, something that at one point I didn't even think was achievable. Versatility. Now, this is a strategy that you can apply to Forex, equities, Bitcoin, anything really. As long as it has a candlestick chart, you can kind of apply it. And scalability. You guys know one of the biggest things that I look for is a strategy that's scalable, or else you're wasting your time learning a strategy. And then let's say your position size increases and you realize, hey, I have way too much size for this trade. There's not enough liquidity, like some low float penny stock strategies, right? Which is why I went with this strategy because you can actually apply it anywhere. As long as there's volume, you'll be able to scale this up. Now, one of the biggest benefits is, of course, risk to reward. You're going to have a better risk to reward, and this is going to be on a consistent basis. You're going to have a fighting chance. This is something that, I've tested, I've back tested, I've tried every strategy, and I'm trying to find an edge over everyone else. This strategy will provide that for you. The other benefit is that your stop losses are going to be tight, which means you're not only going to be making more money, but you're also going to be losing less. Now, there are some conditions for this strategy. You want to find the easiest technical trades. Don't make it hard on yourself. You got to find ones that follow technicals. For me, you guys know I love AMD. That's something that we day trade. And anytime that I'm down on the day, the first ticker I'm going to look at is AMD. It's one of those tickers that there's a lot of retail traders, there's a lot of technical traders, and it follows technicals usually, as long as, the market's in your favor. Next thing, you want to have some sort of a catalyst, a fundamental backing. Now, this isn't easy for everyone, but we have a team of research analysts working alongside us. We have people with professional designations and industry experience. So let us do the heavy lifting. We'll try and figure out a nice entry point, and your job is just to trade it. Now, this is a strategy that you do want to look at multiple time frames. In most strategies, this is the case. So remember, don't forget that. That is important. And the market and the sector, you want to make sure that whatever you're trading, you're going in the direction of the market. There's no point of making it harder for yourself, especially if you're looking for the easiest technical reads. Make it easy for yourself. If you're trading AMD, monitor SMH, monitor SPY, see how the market's moving and see if it's going in the same direction. Next, inflection points. Now, this is the key to my success personally. I like to combine this strategy with serious inflection points. And make sure that you do subscribe, because I will be doing another lesson on inflection points very soon. And that's definitely something that you guys do not want to miss out on. And the next thing is order flow, right? So you want to monitor your level 2 DOM tape, and you really want to see other buyers getting in at the same time. Don't be the first one in that trade, because most of the time when I try to do that, it just tanks on me even more and I just stop out for no reason. So it turns out to be like a 30-second trade. What we're trying to aim for is trades where it's going to go in your direction, but we want to see a support level building. I'll explain more later on. Now, first, I'm going to start this lesson off by just mentioning that, just like you, I was taught to do it differently, like 99% of traders. And I've tried it and I've had some success, but I've also had some drawdowns. So I'm always on a hunt for a good strategy. And first, I'm going to just show you how normal, traders are taught how to trade. And I'm going to just fly through these slides, and it's just going to show you kind of like the parts of it that I don't like. Hey, double tops. Now, this is one of my favorite patterns. Here's my problem with this. So let's say you enter right on that neckline break, right? Like the strategy says, you have a stop loss in between the resistance, and that would have been your kind of like that support if you're kind of moving it down, right? You're shorting it. Now, let's say you do enter here, and let's say the stock goes right back to your stop, and then finally it actually breaks down towards your target. Guess what? You're just taking an unnecessary loss. I don't like having a stop in between any resistance or support levels. Kind of pointless, because that could turn into like a triple top. Same thing with the head and shoulder. I don't like having my stop losses in between. It doesn't make sense to me. And with this entry, I mean, you still have a lot of risk here. Way too much risk for me. Now, rising wedge, this is a formation we see on a daily basis. Stock will break out, it consolidates, and now it's like, okay, it's losing momentum, volume's dying off. What am I going to do on this trade? You can try to enter over here as it breaks down, and guess what? We've all done that. And guess what happens? It just climbs right back up. Also, your stop loss. I find the stop loss is okay actually on this one. I'd put the stop loss around there as well. Now, double bottom, same as double tops. No point of having a stop loss in between. It's not something that I like to do. I like having my stop losses under that support area. Same thing goes with the inverse head and shoulder, and same thing with the falling wedge. Now, trading. Now, this is hard. Remember, if you want to learn how to make money, you first need to learn how to not lose any money, right? Now, you are going to make some losses. I do it on a daily basis. That's just part of trading. But losing small is the key. Because remember, it's not about this trade. It's about that next trade. If you always take big losses, how are you going to take that next trade? It's virtually impossible. You're going to have fear. You're going to hesitate, and that hesitation is going to cause you to lose more money. And believe me, we have over 18,000 members in our Discord group, and I have seen that happen multiple times, not just to myself, but to other members as well. Always predetermine your risk, stick to your rules, and if you don't have rules written down, you better start. Don't jump in blindly. Things look amazing. You want to get in. This is the first trade of the day. Believe me, that emotion, that dopamine fix, that hits every trader. But just make sure you're not jumping in blindly. Do some DD, use the multiple time frame analysis to figure out, hey, am I actually buying something that's good, or am I buying it just when it, broke out and it looks really weak over here? Now, these are the strategies that I do. Same patterns, just different entries, stop losses, an opportunity to add on to the trade, and the same target. First, let's start off with my favorite, double tops. This one's self-explanatory. The one thing I like about double tops is that if you see it forming, guess what? Take the entry near the support. Because what happens? What happens if you stop out? Well, it's clearly not a double top if you stop out where that stop is located, right? When it breaks over that neckline, you now have an opportunity to do one of two things: either scale some out, which is usually what I do, or add on to it if you're really bullish on it. Same thing with head and shoulders. I don't like having my stop loss in between support and resistance. So I like to enter if I see that there is a entry point and this might form into like a head and shoulder pattern. Target still the same. You have now an opportunity to add, and your stop loss is also at an area that if it fails, it means it's not going to work. The chart pattern that you think it was clearly isn't. Rising wedge, here's what I like to do. I like to enter near the resistance. I think shorting at resistance and buying at support are the two easiest strategies you can do because your stops are so tight. If you short at resistance and it breaks resistance, it's no longer resistance. So you're not really following a strategy, right? Keep it simple, guys. It's so simple. If you're like, hey, this is resistance, I'm going to short it, you get stopped out, guess what? That's not resistance. That could be the next support level. So stop out. There's only one of two ways that this trade can go. And at least this way, you're not going to be taking too many losses. Next one, double bottom, my favorite. So you guys already know how to trade these. Anyone in UT, you guys know this is my favorite setup. And again, you take that entry near the support level. If it breaks, it breaks. You're taking such a small stop loss that, let's say it's 10 cents, right? While most traders are taught to enter at the neckline and risk like 30 cents, you're risking 10 cents. You can take 3 trades and risk the same amount of capital they just wasted on one trade. Same thing with the inverse head and shoulder, exact same formation. You guys know I'm a bullish person on the markets. Stonks only go up. So for me, the one biggest thing is literally just the stop loss. If it doesn't work out, it could be consolidating, or it could just be one of those bull traps and it just, starts declining even harder. Falling wedge, the same pattern over here. You guys will see the same kind of idea. As I mentioned, I like to buy at support, sell at resistance. Anytime you see it mentioned that it's an ad, it doesn't just necessarily mean an adding opportunity. Sometimes it's a scale out opportunity. For me, risk is everything. I use size. If I use size, I don't want to take the risk of losing too much on a single trade. So when I buy at support and it gets close to the resistance, I usually scale some out just to secure my stop loss. And the same thing if I'm shorting. If I shorted resistance and then it goes near the support level, do the exact same thing. Take some off, secure my stop. Continuation patterns. Now, this one kind of self-explanatory, but you'll see the exact same setups everywhere. So instead of always buying the breakouts, try buying the support. Yes, it's sometimes risky, believe me. I get it, because you don't know where it's going to go. Like when you look at this bullish triangle, what if it just consolidated and then broke down again, right? What if this was just a spike up, couldn't break resistance, and then trader just gave up and was like, you know what? I'm done with this trade. Started selling off on the ticker. What if the market just tanked? At least with these entries, your stop loss is so close to your entry. Your risk is defined. Something that's so hard to do on a trade is to know where your risk is at before you even get in. This type of strategy will help you predetermine that risk. Bullish pennants. Same thing here. Now, this one's hard because, one thing about triangle formations, it can break out up or down. So for me, I want to see a reason why this should go in one direction. If I'm bullish on this, there has to be a reason. If this is going to turn into like a flag setup and it's ready to rock, what's driving the price even higher is the question you want to ask yourself. If you can answer it, take the bullish side. And what's the worst that can happen? Let's say you bought it at the support level, hoping that it's going to hit your target. You stop out. Guess what? Instead of stopping out, just reverse the trade. Same thing with this pattern as well. And the opposite thing with the bearish triangles. All right, guys. So this is pretty much everything you need to learn. Now, here's an old chart because this lesson, actually, we prepared this lesson like so long ago that AMD was trading at $20. Just never got around to getting this lesson done. But here's another double bottom on AMD when it was trading at 20s, the good old days. And as you guys can see, you can just buy it at that 2020 area. And the best thing about buying it there is like, where's your risk? 2010? 10 cent risk. If I can take 10-cent risk on every single trade, I'd be the happiest person in the world. Now, most people would be buying it after 2060. So now instead of taking 10 cents risk, most people are risking 30 cents. Right? And this is on a $20 ticker. Imagine when you scale up to tickers like Tesla. And same thing over here. These are areas of resistance. Now, if anyone trades AMD, you guys will know AMD loves to trade around those psychological levels and hold numbers. So as you guys can see, we have a whole number there. We came down, market just dropped, tried to consolidate, and we finally started breaking down over here. Easy stop loss, risking 10 cents, and then a move all the way back down. Same thing with this one. Now, here's what usually happens if you try and buy the breakout. This is some poor sucker who decided to buy the breakout and it never happened, and he just took a loss for no reason. Instead, wait for this to happen. You got one test, two test, let's say 2.5, and then a third test. Usually after 3 tests, the fourth one usually goes, or even the third one. But this guy probably stopped out if he was following the strategy that people were taught how to do. We can be a little bit smarter. We can be like, hey, we're going to buy over here. We're expecting this to go up. What's my risk? Just underneath this trend line. And again, you'll see the same thing. We're taking like 10 cents risk. Now, this strategy, you can do multiple strategies with it. It's pretty simple. Let's say you bought the double bottom over here. You're moving up to resistance. And let's say, yes, this is resistance. I'm going to short it. And you short it. But then you get stopped out. It's okay. It's such a small amount of risk that you can take that one loss. And let's say you go for a walk, come back, and you're like, oh, yes, it's hitting a trend line. You buy it at support again. You can literally just carry this until the next day. Now, here's why I don't like breakouts or breakdowns. So imagine you woke up the next day. You don't have a position and you want to short AMD as soon as it cracks this trend. That person is also not having a good day. For us, we like to buy the supports. Buy supports, sell on those spikes, do it again. And guys, I know it seems so simple when we show a chart up here and we already know what's going to happen in the future. But if you really want to see how we actually trade this, it's important that you guys listen in on YouTube, because we do trade this every day live. Well, not this exact chart, but tickers. And you'll actually see how we kind of time our entries and why we get into the trades that we do, where we take off some size, where our biases lies. And you'll learn a lot more from that. All right. And just like anything, this is for advanced traders. And why is that? Well, you really do want to have, built your pattern recognition skills, right? You have to be good at timing your entries. You can't have hesitations on these, because you're literally buying at an area where you're like, okay, this could go against me. And it's ideal for traders that have a sense of the market, right? I see a lot of new traders with one problem. They're really just trying to trade more, but they're not really trying to learn more. So, if you guys are ready to trade, pretty simple. Click the subscribe button, join our Discord server. And of course, if you want to really learn how we do this in real time, just stay tuned, because on a daily basis, we have our scanners that are streaming and you'll actually hear us trade live. So you can watch and learn at the same time, because to be honest, I feel like anything that you want to learn, especially in trading, it's far too easy to just have a pre-made chart and be like, I know the direction because I've already prepared this lesson. It's much more beneficial if you actually see how we do this in real time. Now, Q&A session. You guys have any questions, comments? Drop it down on the live chat.
Yeah, TJ, I'll read them out to you. Here, what's up, guys? It's Iman. So we have a question here from Popka Chin. How do you not get faked out on all of these patterns, although it's near resistance or support, but sometimes they can go even lower? So how do you reduce the risk of a fake out?
Again, you want to like time it accordingly, right? So what I like to do is I watch the market internals. I try and time my entries. So I'm going to use the AMD as an example, because I think that's one of the best like learning tickers, only because it has consistent volume. You can use some small size, and it moves enough that you can actually learn from that experience. So if it was AMD, I'm going to be monitoring SMH, which is the semiconductor ETF. I'm going to be monitoring SPY. And I'm going to be doing that multiple time frame analysis and looking, hey, is this at a good bounce point? Not just on AMD, but on SMH and also on SPY. If those criteria match, take the risk. I mean, there's no reward without risk, so you got to try at least, right?
Perfect. Thanks, TJ. So we have another question. Reversing a trade, how often do you reverse? And are there specific situations that you feel comfortable doing that?
Reversals are something that I don't like, because it goes against what I like to do, right? Like when I buy a stock, I buy for fundamental value. We put a ton of effort into preparing our traders and giving them the insight on what tickers should be good. And if the market goes up 70 to 80% of the time, yeah, I like shorting. It's fun. It's fast, because, when things go down, it goes down really fast. Elevator down, staircase up. But sometimes I'm too biased to take that short side. Now, there are some tickers that's not true, right? GME today, we were trading it, we went short and then we went long. My problem was I didn't hold on to the long enough. But there's certain, exceptions that I'll make. If I think that it's time to get out of a trade, I think it's too high, you'll see me starting to, go on the short side, trying to scalp as much as I can. So then eventually when I hold on to like a bigger short position and swing trade, I'll have at least that safety net of profits while I was just, monitoring it, watching to see if it'll actually break down.
Awesome. Thanks for that. And we have one more question. He feels like there are times where his stop loss are too tight and they lose out on profits. When do you move your stop loss?
So when it comes to technical trading, right, you're buying it because of technicals. So your stop loss has to be at an area where you have two choices. Like if it hits your stop, it means that chart pattern doesn't work. Or let's say it's not even a chart pattern. Let's say you're just buying it on a static support and resistance level, right? The moment that it breaks, you can stop out. And what I like to do is when I stop out of a trade, and let's say I'm still bullish on it, I still want to try it. I know people say don't revenge trade, but for traders that have been trading for a while and they understand the patterns and they have a consistent win streak or a consistent record of trading, I think it's the wrong thing to do because you just put in so much time and effort into analyzing the stock. You took the trade, you got stopped out. I like to keep monitoring that trade because there could be another trade, could be the next trade, the very next trade, 5 minutes later, could have been the one that actually makes the most of the money. Which, to be honest, if you guys listen to us on live trading, you'll see that it happens to us almost like on a daily basis. In terms of stop losses, again, I always look for 2-1 or 3-1, right? So if I'm looking for 60 cents, my stop loss, I ideally would be around 30 cents, right? So you want to find the ticker that fits that category, right? Risk management is first. So don't be trading Amazon with a $1 stop loss, right? That's not reasonable. But let's say something like GME, for example, a $1 stop loss may be reasonable. If you're buying it at a good level and it's an inflection point, $1 stop loss is perfect. But if you're trading something that has like, an ATR of like $60 in a daily basis, the stock moves, $60, then or more, a dollar stop loss doesn't make sense. So again, try and utilize the other tools. I'll be doing a lesson on, ATR as well. So it'll kind of help you guys out. As far as trailing stop losses, so most of my long-term positions, if it's something that's like a risky one, right? So we have a lot of risky swing trades. Most of them are like SPACs. Those SPACs, I don't want to give up the profits. I mean, these are, stocks trading in a hot sector. Anything can happen in a second. One SPAC goes down, sometimes the other one will too. So for those, I like to have like 11% stop loss. I like putting my stop losses after I've made money. So I don't put it like right after I get into the trade because, 8 out of 10 times, guess what? I'm going to get stopped out for no reason. That one little candlestick stops me out. And then it goes the exact direction that I wanted to in the first place, right?
Exactly. Thanks, TJ. So it doesn't look like there's any other questions. So there's a couple things, you guys, that's really crucial for you to be able to do this correctly. And the first thing is drawing trend lines. And practice drawing trend lines because you won't know whether or not you're taking a right entry or where your necklines are if you don't draw the right trend line. So that should be your first practice. And second practice should be to size down to 1 or 2 shares for a week and literally just practice so you can get your confidence level up. So you're not worried about your stop loss of 50 cents or 30 cents getting hit. And you can do it 100 times and say, okay, this is working, because you're not going to hold your positions and stay true to your rules until you practice this with real money. And the only way you're going to feel comfortable doing that is if you size down completely.
Yeah. And, I lost money in February 2018. The best thing that ever happened to me is that I sized down because before then I was using size to sort out all the issues. I had a fundamental knowledge, so I used that as my backing. I used, the stats to my advantage, right? Tech stocks are always like running up and they're always like leading the market. So my idea was, hey, I buy 10 of them, 9 of them will be up, at least 8, right? And anytime I went down, I take the profits from the ones that have gone up, and then I just double down on the losing positions. That formed a really bad habit. And it's thanks to sizing down that I was able to really fix those issues. And believe me, it seems counterproductive, but it's one of the easiest and best ways to kind of reassess. Are you actually trading properly, or are you just gambling? Right? When you take the whole gambling away, like no one's going to be happy you made $5 on a share, right? If you're trading one share. When you're trading 100, 1,000, 10,000, oh yeah, that's a lot of money. But with one share or 5 shares, you're not going to have that gambling mentality. You're going to be actually trading by actually utilizing your skill sets and taking that money out of the equation.
Exactly. We had a question here about multiple time frames. So the benefit of multiple time frames, you guys, especially if you're doing intraday, is that the 1 minute can tell you a story. Let's say you see an ascending triangle or a head and shoulders, and then you become bullish or bearish. But then on the 5 minute, you can see that it's a bull flag. And so it's so important for you to see the big picture before you take these entries and get multiple confirmations before you enter a trade. Because what you don't want to do is when the 5 minute traders are trading a bull flag and you're trading a head and shoulders, then all of a sudden you're in a place where you're going to get stopped out because the majority of people are going to be watching that 5 minute time frame. And then we have another question here. TJ, you can answer this one. Does a common indicator like RSI ever play into your support and resistance levels? Say a stock is at short-term support, but RSI is well above 70 or 80. Do you take which one takes precedence over the other?
RSI is king. I love RSI. You know, it's my favorite tool. Unfortunately, IB has the ugliest RSI indicator I've ever seen. So I've been sticking to my old MACD habits. Now with the RSI, wait for pullbacks, right? And again, multiple time frame analysis, and also go back. See how the ticker handled being at 70 to 80 RSI. Because every trade is different. Every stock is different. Every, FX pair or coin like Bitcoin is different, right? Some can stay oversold or overbought longer than others, right? There's some that, hey, every time it hits 70, it tanks, right? How do you confirm that? Check the history. Check how you know, how it's worked out in the past and use that. I mean, if you have 7 different data sets saying, hey, 6 out of 7 times, every time it hit 80 RSI, it came down. All right, there you go. You're stacking odds in your favor. Take that trade and see if it works.
Exactly. And then we had a question about take profits. So guys, there's a lot of different strategies to take profits. A lot of people say the distance between for example, a double bottom, the distance between the double bottom and the neckline up, you should take first profits. That's one strategy. Another strategy is VWAP or moving averages, take profits. Another strategy is volume profile. Look for areas that are a bit weaker. And then when you get to a stronger area, that's when you want to take some profits. And so a lot of that just has to do with what's on your chart. There's no real do this every single time. And a lot of that comes with practice. And TJ, you probably have some more info on taking profits.
Yeah, I mean, guys, we're doing this to make money, right? So for me, you guys know, well, most of you guys that are in our chat room know that as long as I can make my stop loss, I'm happy. That's it. It's a risk-free trade. So I like to convert all my trades into risk-free trades. What that means is if I think my stop loss is 30 cents, as soon as I make 30 cents or even more, hopefully more, but usually I like to give it a little bit more room, just so I can at least pay for commissions and, any drawdowns, right? I take some off. I take like half off. Let's say it went up like 45 cents. Perfect. Take half off. Now you're guaranteed to win. Put your stop loss at your break even price and just let the trade work out.
Exactly. And I'd really recommend you guys. TOS has TOS on demand where you can do a market replay and practice drawing lines and practice taking entries. You can also do Trading View with a free account. It lets you trade crypto for free, paper trade, right? Practice drawing the lines and practice taking the entries. There's so many tools at your disposal, and a lot of people want to sit and chat and kind of talk about, should I buy this stock? Should I buy that stock? What should I do? You could be spending that time really practicing. Get in there, draw the lines, and practice. You're going to need to do it 5,000 times before you start getting comfortable. It's not going to happen with 10, 20, 30 times. It's not going to happen by just watching TJ go through this stuff. You're going to have to do it thousands of times before it becomes second nature. And luckily for us, I mean, think about the stock market 20 years, 30 years ago. They didn't have computers. They didn't have these charts that we can look at or online YouTube videos to watch. You have the world at your disposal. Take advantage of it. Don't spend your time wondering whether or not you should buy or sell a stock tomorrow, and that's your discussion in the chat room, right? Use that time wisely.
Yeah, and you're gonna develop this skill set, right? You guys know that most of my money I make swing trading. So what do I even bother day trading? It's easy. It keeps your skill sets sharp, right? You want to make sure that you're not tackling anything in the market without the proper skill sets or being aligned with the market. So for me, my worst days are the days that I just don't have a good read on the market, right? I just came back from vacation, like you guys saw on QS, and I was confident as hell, ready to tackle the markets, except I just was not in this right direction of the market, or trade in this matter. And again, that's something you're going to develop as a trader. Now, I personally, I like like live trading, right? So if you want to learn, just size down. Before I never had that. Like when I started trading, it cost $30, right, to trade. $30 just for commissions, by the way, right? And when you really look at it, you're gonna have some losses. So every time, just to make up for that loss, I have to make I have to make at least $50 to call it break even to make up for the losing trades. Now you guys have free trading or really cheap trading. At this point, everyone should be trading live, but 1, 2, 3 shares, and then size up your share size. If you notice that, hey, my dollar per share is going down, my win rate's going down as soon as I sized up, okay, there is nothing wrong with your strategy. There's just something wrong with how you're tackling it. Maybe it's your emotions, maybe it's your psychology on it, right? And that's something that you won't figure out when you're paper trading. So again, try it live, size down, and build confidence in your system. You can't build confidence in your system by paper trading because again, like it's totally different when you're doing it live. No matter how many shares it is, you're testing the market, you're testing your skill sets. I like doing it live because we're involved in the market on a daily basis. I know exactly where SPYs ended today. So if I went back and looked at today's data, I kind of know where any trade is going to kind of be moving, right? In which direction when I really like, test out strategies. So I think it's best to kind of do it live, especially since it's free for most Americans and really cheap for everyone else in the world.
Yeah. And and somebody asked, how do you get your keep our edge? And TJ kind of just said it. You guys, the sooner you can see a pattern or something forming, the sooner you have the advantage over every other trader, right? And that's why it's so important for you to start really memorizing and watching charts over and over and over again, all day and all night, because you can see an ascending triangle forming after the first two swing highs, right? You can see a pennant forming after the first bounces off the top and the bottom, and the trend lines are built, right? You can see an H forming once you see it start curling, right? If you can see the pattern forming before other traders, then you have an edge, an advantage to get in at the support and resistance levels. And also another benefit to that is that, for example, an ascending triangle, if it usually bounces 4 times off the support. If you can get it on the second bounce versus on the last bounce, it doesn't matter if it even breaks below and breaks out of formation to the downside. You're still in the green because you were able to get into that and play that pattern before everybody else was, right? And so that's the importance of really learning patterns, is being able to see them before they happen. Jem had a question. What patterns do we see the most in knife catching trades? Is it a falling wedge?
Depends which time frame, but with knife catching, you're looking for things that are, I'd say, like really weak, like you have to have some excessive volume just on the sell side. It has to be so imbalanced that, any bid that comes up is just literally taken down, right? And that, when we're doing knife catches, the first thing I look at is my tape level 2 dom. That's it, right? I want to see, hey, these guys are getting in. There's thousands of shares being bought, but the price is still moving down. Something's wrong. Someone is still selling. There's still some selling pressure, right? So when you're doing knife catches, hands down, one of the best tools is, reading your tape, seeing how many orders are actually getting filled. Is it still continuously tanking? And knife catches are dangerous, but again, if you stick to your rules and you're good at stopping out, knife catches are amazing. But if you have trouble stopping out, it's probably not the best strategy.
Yeah, good question, Jim. And I recommend to all of you, find a partner, find 2 partners. We're lucky enough to have TJ and the rest of the team, and Josie and K Biggs, and all the guys that are in the voice chat in the day, and we all kind of help each other. Incubator, all of us, and we all kind of look at the charts and we identify what's happening. And I will say the biggest thing that helped me was not trading alone. Right? Don't sit there by yourself and try to figure out what you're doing. Find a partner. Find somebody who's learning with you. Learn it together. Do it as a team, and give yourselves an advantage. Because if there's something you're not seeing because your eyes, for some reason, are playing tricks on you, that other person may be able to see it, and you guys can work together to come up. And that's why UT is so important. And TJ talks about it all the time. Is that you have to work as a team. And that's the benefit of being part of this group, is that we do it as a team. And that's why our voice chat is so important. And David said dibs on Suya, so go ahead, take him.
And, one more thing, like the team environment is so important. You guys saw it on QS, right? I checked Bloomberg. I checked TOS. I checked IB. I checked Briefing. Like these are the 4 best tools that I use for news, and I couldn't figure out why QS was tanking. And then Jem comes on and is like, hey, here's why it's tanking. Gives me the SEC filing. And guys, that is the essence of what teamwork is, right? When we're taking trades, it's amazing having more traders taking that trade with us, right? But it's even better when we have more eyes on the market and we figure out what's going wrong, what we could have improved on. What did I miss? Right? There's so many times that there's, a stock that just rips out of nowhere. We don't have enough time to do, a full deep dive analysis on it and check how its valuation is, how its, pricing is, or valuation based on its comps. We don't have that time, right? We don't have the luxury of going through their balance sheet and listening to earnings calls. But as a team, I'm able to check one thing. Someone like Mark is able to check another thing. And we can use those 2 fundamental skill sets. And maybe, you saw it even on today's trade, right? Today's IPO. We weren't really bullish on it for the reason of valuation. Margins were slim, valuation was too high. So we need to be a little bit safer on that trade. If it wasn't for the support of like Mark and Sean, I wouldn't have actually looked at it, right? I would have just been like, hey, this is an IPO trade. And, stocks only go up. And guess what? I probably would have been bag holding today to this moment right now. Then I'd be doing research, right? Usually that's when most people do their research once they're bag holding. So learn from our mistakes. And honestly, this is a team environment. We can't really explain how vital it is until you guys experience it. And then you'll actually see like we are in our flow and we have members that we trust and they're on voice chat on a daily basis, and I listen to all their opinions. Everything gives me an extra edge, another perspective that I didn't have when I took that trade, or maybe when I was considering that trade. And also the news, right? Things change so fast. It is impossible to keep track of everything that's happening. Like there are bots that are specifically tracking Trump tweets. Well, used to before he got banned, right? Just imagine like that's an entire bot dedicated to do one job. With UT, we have an entire team. And that's what makes us really good and why our valuations are so much better. And shout out to Brenda.
Shout out to Brenda. Yeah. And, my last bit of advice, and, we're coming to the hour point, is a lot of us will have entries into our long-term positions or swing positions, and we'll spend the day just staring at that ticker, which is fine if you want to do that. That's totally fine, right? But that ticker is only going to have one or two patterns throughout the entire day or 8 hours that you're staring at it. And so if you really want to get good at trading patterns, go through multiple tickers and watch patterns form. And you don't have to trade them necessarily, but don't spend your entire day staring at the one stock that you have money in because you're afraid it's going to go down and you're going to lose money. There's no value that brings to you to learn that. There's no value at all. And I've told a couple of my close friends this in trading. Some people like to just trade one stock, which is totally fine. But unfortunately, stocks change the way they behave. So the easiest way to trade one stock is to have multiple strategies. If you only have one strategy, it's very hard to trade one stock over and over again every day. Your eyes start playing tricks on you, and that's the easiest way for you to lose money, right? So my recommendation is either learn a lot of strategies to where you can capitalize on playing that one ticker, so that way you're not biased on just one, buy low, sell high, or play these breakouts, or broaden your horizon, right? Start looking at other tickers that can fall into your strategy, and play those. And if something fits into your criteria, then play it, but don't force it, right? I think that's the biggest thing you can do, is just force it because of the one ticker that you're watching that you want to play that day.
Traders, today was a good example too. Remember, we were trading GME and it came down, and I was short on it too. And you're like, okay, I'm gonna go on to another ticker. I looked at it and I'm like, wait, this is at a strong support level. It's gonna bounce here. Instantly we went back to the same ticker. I covered my short, went long, and you were trading it too at the same time. Like those are those moments where it's like, hey, yeah, maybe it didn't look so good, but then eventually a stock usually hits either a support or resistance level where you can actually take that trade again. I'm okay with revenge trading as long as there's an actual entry criteria that it meets. I'm not just going to revenge trade it 2 seconds after I got stopped out. No, it has to meet some criteria. It's like, okay, yeah, I got stopped out. I want my money back. So let me look for another entry. Then I'll tackle it.
Yeah, exactly. And you'll hear us all day, you guys. We cycle through tickers because we want to see where the next advantage that we have is, right? But yeah, biggest bit of advice, you guys, if you're entering a position and you're not an intraday trader, and don't sit and stare at it for 8 hours that day because you're afraid it's going to go down, right? That's the easiest way for you to become emotional and close the position because you're afraid of losing more money, right? And that 8 hours, all you're doing in that 8 hours is just really submitting to your emotions and feelings, which is no benefit to you at all, because that's what you should be controlling to become a good trader. You got to be controlling those emotions and those feelings. So my recommendation is, yeah, exactly. My recommendation is really just make sure that you guys spend your time doing stuff that's benefiting you. Don't go to sleep asking yourself, what did I learn? What did I learn today? Go to sleep and tell yourself, wow, I can't believe I learned that today. I'm so excited I can practice that strategy tomorrow. That should be every single night.
And write it down, please. Believe me, there's so many notes I took, and then I referred back to it, and I'm like, wow, this was golden. But at that time, I didn't understand what I was reading. But I still took notes on it, and believe me, it's those like aha moments that really make things click together. And I've got this question before where it's like, when did you know you were good? When did you know You're going to be successful. Honestly, it just when all the tools, everything that you've learned just comes together and you finally see the holistic picture, that's when it all just came together. And then it just became a question of how much confidence do I have on the setup and how much size am I, you know, willing to take on before my psychology starts messing up the trade.
Don't leave if you lose on a ticker. And I think he just said this earlier. It's so important. Don't just change tickers because you're mad at that ticker. Don't get stopped out and then be like, God, I got stopped out. I'm going to switch now. That's still in a good area, right? If something's at a support level, it's still at a support level. Even if you get stopped out, continue to watch it. Wait for a better entry, right? Get that money back, right? Don't just give it to it and say, okay, I give up, right? It's so important for you guys to make sure that when you stop out of something, your emotion doesn't create this, I want to exit now because I feel like I took a loss and now I don't want to do this anymore, right? Say,
Yeah,
no,
but there
oh,
should
I
be
took a
balance
loss.
too.
Yeah, exactly. Yeah. I took a loss. I didn't have the best entry. Let me see if I can find a better one, right?
Yeah, don't just like, just like, okay, I got stopped out. I'm going to buy it now. It's gone down 10 cents. No, it's like, be strategic. It's like if you bought it, you're buying it because you're trying to catch the knife. And maybe it just like sold off so heavy that you're like, oh my God, it has to bounce around here. Just because you stopped out doesn't mean that it might not bounce. It's probably going to be a better entry for you. And that second trade, and believe it or not, you'll probably see us do it. We stop out quick, and it's that next trade that really like kills it for us. You guys probably saw it on Tesla. I believe it was last Friday when me and Greedy, we both took Tesla 750. I took the 750 calls and it was trading at like seven something, right? But before that, it was a bit higher. We quickly stopped out. I think I took like $3 loss on the contract side, but then it didn't fill me, so it ended up being like $6. The next trade, that's the one that I hit like 300% on, right? So again, it's like, yeah, you stop out, follow your rules, but if you see that next entry and they're like, all right, this could be the one, take that trade because you're probably right. Now, again, you want to build your skill sets up first before you attempt to do that. But as long as you have built your skill sets, you have some confidence in your system, you have a track record of being, at least like let's say 60% right, then what's the harm? You have to take the risk anyways, and you already did all the work. Don't just like, let that slide. One of the worst things that I hate is when I did all the homework, did all the DD, and then I just missed the trade. Those are the worst, right? And you can avoid those because those opportunity costs, it's a lot. You guys will probably remember my WIX trade where I got stopped out and it was the worst price. It was literally the lowest price in March. Yes, the market tanked. Okay, I can use that as an excuse. But to be honest, it was literally the day that it hit the lowest like price possible. I get stopped out and that thing ran up even higher, like not even months later.
Yeah, it's crazy. And somebody talks about, stopping out and adding. My recommendation to any of you guys that are newer that don't have as much capital, don't add to your trade if it's going against you, right? Just it's if you have a big capital and you can do it and you can manage it and you really understand what the stock's going to do and you understand fundamentals, that's fine, right? But don't just stop out and then re-enter, right? What's the point in letting it go further and further and further down, and all of a sudden you add shares and now you're halfway down instead, and now you're just even in a worse place, and now you're maxed out on your capital because you don't have money to do anything now, right? So just stop out, wait for a better entry. We did Tesla last week, similar to TJ's. Tesla tanked from 760 all the way down, and we saw 720 as an inflection level, and we said, hey guys, 720 is the inflection level. It's long over 720. It broke 720, hit 718.50, and we said, you guys, if this goes back over 720, it's long. Broke back over 720, went all the way up to 750, right? So these inflection areas are still just as important, even if they're broken. And it's very, very likely that they'll push past it, $1, $1.50 in Tesla's case. In AMD's case, 40 to 50 cents, it can push past that inflection point before it pulls back. So really just make sure that when something pushes past an inflection area or somewhere we talk about, that doesn't mean it's done, right? Once it pulls back and breaks back over that level, it's still long over that level, right? And that's similar to patterns as well. So,
All right, guys. So that's gonna be the end of our lesson today. We're gonna be doing some more lessons. I think next week we're gonna be starting on Nick's lesson. So he's gonna be teaching you guys the tools to be successful. And that comes with being mindful. Having like mindfulness of yourself, knowing yourself is key to everything that we do. Right? We know which trades we can take. We know which risk is acceptable. Everyone is different. Everyone has their own risk tolerance, but believe me, your personality does play a huge factor in what type of trading style you should follow. So make sure you guys tune in for that lesson too. Take care, everyone.
thanks everybody for joining. Have a good night.